the U.S. labor force continues to shrink, and then some big media news as well.
Yeah, it seems like a lot of these smaller companies that are owned by some high-profile people, but they're not household names, they're getting bought up by some of the streaming services and some of the bigger media companies, and it just kind of goes back to the issue of content is king.
All right, we're going to dive into all that and more over the next 3 hours. In the meantime, let's get a check on the trading day with John Tucker.
Yes, gentlemen, how about a record? The NASDAQ Composite Index, every major industry group there is higher. The index hitting an intraday record right now. Some of the individual shares, you have Cardinal Health, they're plunging by the most in 3 years. Their quarterly results and its forecast came in well below the street's forecast. The FAA issuing a new safety directive for all Boeing 737 MAX airplanes. Some economic numbers today. Weekly jobless claims down for a second week, falling below the 400,000 mark. The year ago, before the vaccines, claims are running in the millions. The government issues monthly labor market data, of course, on Friday. And the U.S. trade deficit in goods and services widening to a record in June. That's because consumer spending and investment by businesses recovered from the pandemic. Dow Jones Industrial Average 208 points higher, up 0.6%. We're at 35,000 even. S&P 500 up 19 points at 4422. And the NASDAQ Composite Index 103 points higher. That is a 0.7% rise at 14,884. Check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Thank you so much for that update, John Tucker. Let's get to the Market Drivers Report. And joining us now is Dave Wilson, stocks editor at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. Also, Preeti Gupta, markets live reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. We have a party on this Thursday afternoon. We have a full house in the studio. We are back to work. Yeah, we're the only ones, right?
No one brought all the testing, all the wine testing.
No.
You didn't do it.
Tomorrow. That's something we do on Fridays, maybe. What are you watching for on this another day, another record, Preeti?
Well, I mean, it's all about the jobs report tomorrow, right? I mean, that's really what all this positioning is about. I mean, you saw claims higher today, but not by that much. It wasn't that scary. And of course, if there is no bad news, why not rally higher? So that's kind of what you're seeing in the market today, but a little bit of risk-off positioning. I mean, tech outperformance, we've been saying that over and over and over again. And once again, you kind of see this ahead of major data points. So it's once again really all about that payrolls number tomorrow.
And Dave Wilson, kind of looking at those equities, again, all-time highs, as John Tucker was just reporting here. Some good earnings. Is that kind of the driver we have here today?
You know, that's a big piece of it. But I just got to ask myself, looking at today's trading, what Delta variant?
Right.
I mean, when you consider that some of the biggest gains in the S&P 500 are going to casinos and cruise lines. Go figure. In fact, you had Penn National Gaming do a complete turnaround. The shares were lower early on after they agreed to move into Canada by buying a sports betting company called Score Media and Gaming. We're talking about a $2 billion deal. And Penn National is now the best performer in the S&P 500, up 9.5%. You know,
David Portnoy out there on Twitter pumping the stock.
Well, is that why? Why the reversal there? Because this is one of the ones I'm keeping an eye on for our Beyond the Bell segment later.
It could be just as easy as what Paul's saying with Dave Portnoy, because don't forget, Penn National bought a stake in Barstool Sports last year. And so Portnoy kind of came on board, and he certainly promoted Penn National in the past. And so now you have this company, you know, trying to do north of the border what it's doing here in the U.S. in terms of getting more involved with sports betting. So, you know, that's part of what came out of the Barstool deal last year. And now, you know, you're talking about a geographic expansion.
Pretty, just looking at the bond market here, a little bit of movement. I got the 10-year down about 10-30 seconds, pushing the yield up just a little bit out. You know, you can't oversell it here, but at least I got a 1.21 on my 10-year. Anything going on there?
You know, I wish there was. It'd make my day a little more exciting.
Summer.
But it's summer. But you know what? Even when you see yields higher, you see financials are one of the leading sectors up on top. But what's interesting is on a day that yields are up, you're also seeing those yielding sectors up as well. So consumer staples, utilities, REITs, those were the three sectors that were leading in the morning. And now they've kind of come back around. You saw energy and consumer discretionary coming up on top. But those were the three sectors on a day that bond yields were higher. So to me, it's kind of interesting that even, like I said, on a day the bond yields are higher, keep repeating this phrase, you still have people going to the stock market looking for those yield.
Preeti, why, to Dave's point, Why do you think do you think there is a disconnect between what we're seeing from equities right now and the news that we're seeing from companies that are saying, hold on, let's slow this reopening plan? BlackRock, Amazon, just to name a few.
Yeah, absolutely. And I think Wells Fargo as
Yep.
well,
Yep.
also putting it back a month. I think there's also a international component to this as well. Because, I mean, you do have all these domestic stories. There are plenty of risks. I think there's a wall of worry graphic that comes to mind of all these different things we should be worrying about. But at the end of the day, if there's a kind of pockets of where you should be putting your money, consider the international picture. If you think there's virus risk here in the States where the vaccination rate is quite high, look around the world, things aren't exactly open even for that matter. So for that kind of perspective, U.S. stocks broadly have that major advantage going for them. And you see that in treasuries, you see that in the dollar. It's kind of a U.S. asset as a whole. It's friendly trade there.
Dave, is Robinhood now a meme stock, a Reddit stock? It's just all over the place here.
You know, you have to ask that question. And, you know, I've been making the point today that if you think of Robinhood as a meme stock, and of course this is the trading app where many a meme stock has changed hands. If you think of it that way, companies that have found themselves in that position in the past have taken advantage of it to sell shares. Think about AMC Entertainment, the movie theater chain, right? So what happens now? You have investors in Robinhood markets looking to sell shares. Company filing almost 98 million shares on their behalf for
this is a
potential
little
sale.
different.
It's different because the money's not going into the company's
And
pocket.
it's not diluting.
But it's also different because it's just a week after the initial public offering, which is another wrinkle, which is why, you know, it's the investors that are going to be the ones doing it and not the company
But isn't this
itself.
because the company needed to raise so much cash so quickly a few months ago? These investors came in and they were able to get this deal for these convertible notes.
Well, it's understandable that they would want to cash out. I mean, at least some of their positions. But at the same time, I mean, to see the kind of turnaround we've had, that's what happens when a share goes up 87% in 2 days, which is what happened to Robinhood this week.
I made a lot of those phone calls in my banking days when the stock would do something crazy. Not have a move like that, but if it's, stocks had a nice run, 20, 30% over a quarter, pick up that phone call and say, let's hit the market. Let's sell some stock here. You sell it when you can, not when you need it.
Oh, absolutely. And bear in mind that 98 million shares is a whole lot more than the 55 million that Robinhood sold last week when it went public. So you're talking about a substantial increase potentially in the supply of shares.
Yeah,
hence the price down in today's trade.
All right, Dave Wilson, stocks editor at Bloomberg News. Also, Kriti Gupta, markets live reporter for Bloomberg News. Dave is going to be joining us in just about 90 minutes for the chart of the day and more. It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number is 10 million. Since its release last November, Sony has sold 10 million of its PlayStation 5 consoles. That's according to their chief financial officer. Bloomberg is also reporting that the console, which retails for $499, is no longer at this point selling at a loss. Paul, you a big gamer?
I'm not a gamer.
Yeah, neither am I.
I missed it. Thankfully.
I did too. All right, well, let's check in on the latest world and national news with Karen Chase in the Bloomberg 1130 newsroom here in New York. Hey, Karen.
Hey, Tim and Paul. Within the hour, the White House is expected to announce a new initiative targeting cars and emission standards. Bloomberg's Amy Morris has a preview.
President Biden plans to call for half of all vehicles sold in the U.S. to be emission-free by the end of the decade. He's also expected to announce his administration is crafting greenhouse gas reduction standards and fuel economy requirements for vehicles. Automakers say they can only achieve these goals with bigger government investment to build charging stations for electric vehicles, among other things. Environmentalists say the order doesn't go far enough. In Washington, I'm Amy Morris, Bloomberg Radio.
Fear of the Delta variant may have been the best thing to ever happen to vaccination efforts. Demand for COVID vaccines has nearly quadrupled in recent weeks in Louisiana, providing a promising glimmer that the deadly reality of the virus might be breaking through a logjam of misunderstanding and misinformation. The state is averaging more than 4,300 new cases a day. Kroger Health, the healthcare arm of the Kroger Company, is teaming up with Lyft to provide discounted rides to COVID vaccine appointments. Just $12. For a fifth day, would-be Spirit Airlines passengers endured hundreds of flight cancellations and delays, according to flight tracker FlightAware. The company is promising things will get better. TSA is reporting screening a record number of passengers. American Airlines has also been besieged by staff shortages and technical problems as they deal with a flood of passengers and staff shortages. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase. And this is Bloomberg.
Thank you so much for that update, Karen Chase. Tim Stenovec and Paul Sweeney live in the Bloomberg Interactive Broker Studio in New York. Paul, a host of virus headlines. As Dave mentioned, it does sort of feel like there's this disconnect between what's going on in the equity markets and what's actually happening. But look, it's forward thinking, right?
It is.
Let's talk about the return to office, because we heard today from 3 large companies, Amazon, BlackRock, and Wells Fargo, all delaying their return to office on risks of the Delta variant.
Yeah, what I thought was interesting, BlackRock and Wells Fargo, obviously 2 huge financial services firms with offices all around the country, delaying it by a month from September roughly to October. Amazon comes out a little bit later in the day today and saying they're pushing it back to January for their office employees. So I think, obviously what we're seeing here is the Delta variant. And employers just trying, my sense is just trying to be conservative, get a sense of kind of how this is going to play out. How long will this variant be creating surge in cases, and just trying to get a better sense there. So buying themselves a little bit more time, which, it's been 17 months. What's another month or two?
Yeah. That's a really good point. I remember where we were a year ago. I would talk to colleagues and friends at other companies, and they would say, oh, our company's saying not till summer of 2021. And here we are in summer of 2021, and it's being pushed even further. I always look, though, at the post-Labor Day return to office as this, like, something to coincide with the return to school.
Yes.
And I think that all of this could change if we start to see school districts say, we're going remote, and we are doing, some sort of hybrid.
Yeah, that is going to be a huge problem. That's what I've been saying since the beginning of this pandemic. It's all about getting the kids back to school safely. And in my school district in New Jersey, they're still 100% behind going everybody back. Everything's coming in now. They haven't decided on whether masks need to be worn, but it's not even a debatable point at this point for a lot of them. And I don't know how true that is across the country.
Supposedly here in New York City, but yeah, each school district is different.
Yeah, and that's just going to be the key issue for so many families trying to deal with this. But hopefully this Delta variant will not have the long shelf life like some of the others.
Yeah, we're going to have much more on the virus in the coming minutes. This is Bloomberg Radio, and this is...
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when the major averages all are rising today. The Nasdaq Composite Index at an intraday record in today's trading. Penn National Gaming, those shares gaining 9% right now after agreeing to acquire the Score for about $2 billion in cash and stock. Now, this is the best performing stock right now in the S&P 500. And then Cardinal Health plunging today. The drug distributor's quarterly results, its forecast coming in well below the street's expectations. And Bank of America also cut its rating on the stock 2 levels to underperform. Right now, the S&P 500, 18 points higher. That's up 0.4% at 44.21. The Dow Jones Industrial Average up 193 points. That's a rise of 0.6%. We're at 34,986. The Nasdaq Composite Index 102 points higher, up 0.7% at 14,883. And of course, traders waiting for tomorrow. The U.S. jobs report expected to show another robust month of hiring. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Thank you so much for that business flash, John Tucker. We went through some of the headlines when it comes to returning to work. Paul, Wells Fargo pushing its return to office plan to October. Florida's hospitals here in the U.S. have been strained by a deluge of COVID patients. Closer to home here in New York City, cases are spiking as well. Let's get an international perspective, a perspective from around the world. Joining us now is Dr. Chizoba Wanadi, an associate scientist at the Johns Hopkins Bloomberg School of Public Health, also the Nigeria country director at the Johns Hopkins International Vaccine Access Center. Dr. Wanadi joins us from Nigeria. Thanks so much for joining us. How are you doing?
I'm fine, thank you. It's great to be here.
Well, it's great to have you on the show. Give us, we do focus, we have been focusing a lot on what's been happening here in the United States. Give us an update from Nigeria, because according to the Bloomberg Vaccine Tracker, only 1% of the population has been inoculated.
That's right. Only 1% of Nigerians have received the vaccine, and that 1% is courtesy of the COVAX facility. We received 3.9 million doses way back in February, and the government rolled out the vaccination program quite effectively and used up all the vaccines. And I have to say that one of the concerns with the vaccines is the risk of expiration. And so the government was able to roll it out without any single vaccine expiring. And that really speaks to the need and the demand for the vaccine. There is a latent demand for the vaccine, despite the fact that we have heard about vaccine hesitancy. There are some people who are hesitant for sure, but there are still quite a number of people who want these vaccines. There is now a new batch of vaccine that we just received August 1st, 4 million doses from the U.S. government, actually, through the COVAX facility. And so plans are underway right now to get those vaccines rolled out and people vaccinated. But as you can see, 4 million doses will only bring us up to 2% vaccinated. So there's still quite a lot of unmet need for vaccination, for COVID vaccination in Nigeria and indeed in all of Africa and many low and middle income countries.
So, Dr. Wanadi, that's kind of where I wanted to go. What's the plan, or what's the expectation in Nigeria and across Africa for maybe the intermediate term over the next 6 months in terms of percentage vaccinated? How high do you think you can get that number, and over what time frame?
It's very hard to say because, as you know, most of the global vaccine supplies have been locked up by, richer countries who got in there first and, paid the manufacturing and pharmaceutical companies to produce vaccines for them and secure those vaccine doses. But now we're seeing more and more of the rich countries donating some of their doses to the COVAX facility. We know that the COVAX facility earmarked 20% of the population of the countries that they would provide vaccine to cover those 20%. And that will be over a period of, from February, that was going to be over a period of 1 year, 1.5 years. So in the next 6 months, we are hoping that we should be able to get enough vaccines from both the COVAX facility as well as the African Union, who is making arrangements also to provide some vaccines to try and get to that 20%. But we're not sure if we're going to get the 20%, because right now the global vaccine supply is in very, very short supply. And the prospects for producing enough to feed the world or to satisfy the world need is actually quite bleak.
One thing that I've been thinking about a lot, and look, in recent months, is the fact that in the United States, we are so wealthy when it comes to vaccines. And there are so many Americans right now who are sick because they did not take a vaccine. And around the world, there are so many people who would get in line to get the vaccine that is just sitting there at the drugstore waiting for an American to come and get it. From the perspective of a public health expert, a physician, and somebody who's living in a country where only 1% is vaccinated, what goes through your head when you see that?
Yeah, I find that, that's unfortunate, really, because there are many people elsewhere who would line up, like you say, for these vaccines. But that is the reality in the U.S., and I think it will also be the reality in lower and middle income countries when we do have enough vaccines. There will, in every population, there will be some people who are hesitant, right? And so U.S. has reached that stage where you have satisfied those who will take the vaccine immediately, and you're now in the phase where you need to encourage those who are still on the fence about the vaccine. You encourage them to get the vaccine, but there are some people who will not get the vaccine, and that's the truth.
All right, Doctor.
I think the U.S.
Doctor, you're going to stay with us, but we just have some news to get to. We're going to come back because we have a lot more we want to chat about with you. Dr. Tizabel Wanadi, Associate Scientist at Johns Hopkins Bloomberg School of Public Health and the Nigeria Country Director at the Johns Hopkins International Vaccine Access Center. We should note that the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, and this Bloomberg radio and TV operation. So we're going to have more with the doctor and get her thoughts again on vaccines. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, a tale of two pandemics, a tale of two different stories of vaccination around the world when it comes to developing and developed countries. That's certainly not a new story. Excited to get back to Dr. Chizoba Wanati at the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, to talk to her about vaccine uptake, because she is the investigator for the Gates Foundation-funded project that helps people get more vaccines through SMS messaging. Is that what needs to be happening in the U.S.? That's the question.
Yeah, and I think the issue here is in the U.S. we have that hesitancy, but what can we do for parts outside of the U.S. internationally and globally?
Well, all that more in just a few minutes. In the meantime, a check of the trading day with John Tucker.
All right, guys, the major averages are all higher. NASDAQ at an intraday high. S&P 500 just shy of an intraday record. Americans slowly returning to work as the economy recovers. Initial jobless claims declining in line with expectations. And an earnings scorecard for you. 426 companies in the S&P 500 have reported so far. 86% have reported positive earnings surprises. Brent Schutte, Northwestern Mutual's chief investment officer, says stocks will push higher after first navigating a cross-current of fears.
There's a too much crowd who's worried about inflation and thinks it may cause the Fed to do something. You have the too little crowd who's worried about the Delta variant, was worried about China rolling over, was worried about peak economic growth. And last but not least, you have the too expensive crowd who thinks that stocks are too expensive and therefore they are due for a fall.
A Datadog climbing nearly 18%. The infrastructure software company posting results, topping estimates, boosting its full-year forecast. Then you have Cigna shares. They're down right now about 11%. This is the most in more than a year. The health services company says the COVID-19 drag on its earnings this year will be double what it had previously projected. Dow Jones Industrial Average 182 points higher. That's up 0.5%. We're at 34,975. The S&P 500 17 points higher, up 0.4% at 4419. The Nasdaq Composite Index 99 points higher right now. That's up 0.7%. We're at 14,879. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John, thank you so much. We appreciate that. As always, Dr. Chizoba Wanati joins us once again. She's Associate Scientist at the Johns Hopkins Bloomberg School of Public Health and the Nigeria Country Director at the Johns Hopkins International Vaccine Access Center. Dr. Chizoba Wanati, thanks so much for staying with us. Vaccine mandates. That's a hot topic here in the United States and I guess other developed markets that have relatively high vaccination rates. Do you think that's something that should be enforced either at the government level or maybe just at a private level, i.e. if you want to come into my restaurant, you got to prove that you've been vaccinated?
Personally, I think so. With the way the COVID transmission is happening and the risk of viral variants that could cause more harm than good. I think that clearly, if we have more vaccination, it's going to slow the spread of the virus and the variants and reduce the odds that even more dangerous variants will emerge. And that's something we really need to worry about. Right now, I think many employers want to see that their employee show their vaccination card. So at Hopkins, for example, there is no mandate per se, but if you're not vaccinated, you have to be tested often. And so, it's still an inconvenience for you to get tested maybe every other day or wear a mask consistently. So I think that there definitely has to be something to be done. It's either there's a vaccine mandate in place or there is stricter and more regular testing, because we don't want an individual's freedom to infringe on the health of the public or the community. So that sense of responsibility must be upheld.
What is the best way to instill that sense of responsibility in someone who says, well, forcing me to get a vaccine is a threat to my individual liberty?
The best way, I think, is to put the responsibility back on them, right? To not put the public at risk. So I think what they're doing in France is, if you're not vaccinated, then you stay home. Those who are vaccinated now have the liberty to go out because we're not going to close the economy down for those who refuse to get vaccinated and continue to be a threat to the public health. So while we don't want to infringe on individual liberties and freedoms, we would have to put the onus back on the individual who refuses to get vaccinated to keep from spreading the disease to other people. So if you're not vaccinated, then you would have to wear masks, you would have to test frequently, and you would have to prove that you're not a risk to the public. So I think it's a matter of putting a carrot and a stick, and I think the stick should be wielded where people, refuse to get vaccinated if there is no medical reason for them not to get vaccinated.
So, Dr. Wanoti, the Delta variant is obviously the dominant variant on a global scale. Do we know anything about how long it will remain and driving these surges? Is it just a factor of when something else comes along, or is there a scenario where this dies out as a variant? How should we think about it?
The way to think about it is that the more the virus is transmitted, the more the risk of variants emerging. So the Delta variant right now, obviously, is a result of continued transmission. The way we are going to get rid of the Delta variant is for more people to get vaccinated and for us to curb transmission by maintaining the same public health measures, social distancing, wearing masks, avoiding crowds, and things like that. So if we look at the epidemic curve of, let's say, the alpha, we can't really tell with the alpha because alpha is less transmissible than the Delta variant. So we're actually looking at a longer term scenario where if we don't put enough measures in place, the Delta variant might actually stay longer than we saw the alpha variant being like a major driver of the epidemic. So I would say that for now, it's really, really important for us to get the vaccination rate up around the world because another variant might emerge from a part of the world where vaccines are not available.
This is exactly what we were warned about months ago, and we're seeing it happen right now. Dr. Chizibo Wanoti, Associate Scientist at the Johns Hopkins Bloomberg School of Public Health, also Nigeria Country Director at the Johns Hopkins International Vaccine Center. The Johns Hopkins Bloomberg School of Public Health that is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Let's get a check on the latest world and national news with Karen Chase in the Bloomberg 1130 newsroom in New York. Hey, Karen.
Hey, Tim and Paul, the Justice Department has just opened a civil rights investigation into the Phoenix Police Department over allegations of excessive use of force and discriminatory practices against protesters and the homeless. Assistant Attorney General for Civil Rights, Kristen Clark, says the department has reviewed a great deal of evidence.
We found that the evidence here warrants a full investigation, but we approach this process with no predispositions or pre-drawn conclusions.
The DOJ has also opened probes into police departments in Louisville and Minneapolis. If you got the Moderna vaccine, you've bought yourself a good amount of time. The company says its COVID-19 vaccine retains its effectiveness at least 6 months after the second shot. Bloomberg's Amy Morris explains from Washington.
Studies show the Moderna coronavirus vaccine is 93% effective 4 to 6 months after that second dose. That's just short of the shot's initial efficacy of 94%. Compare that to Pfizer, which says immunity can drop to 83% within 4 months of its second shot. Still, Moderna's latest data has not been published in a medical journal and further details weren't released. Moderna's also exploring options for supplemental shots that could fend off emerging strains of the coronavirus. In Washington, I'm Amy Morris, Bloomberg Radio.
The FAA is asking airports to ban carry-on booze and arrest unruly passengers. Criminal charges. This year, there have been 3,700 reports of bad actors. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Thank you so much for that update, Karen. Tim Stenevec and Paul Sweeney in the Bloomberg Interactive Brokers studio in New York. The labor movement lost a larger-than-life figure today with AFL-CIO President Richard Trumka dying at the age of 72.
Yeah, dying unexpectedly, apparently a heart attack at his grandson's birthday party. So that's very sad there. But, you know, when you think about labor, he's just been there forever. And I know David Weston had a nice segment in the last hour because David would have Mr. Trumka on his show almost on a weekly basis talking about labor in this country, you know, the jobs data and so on. And so that was a big part there. But he's been leading the AFL-CIO for such a long time. He was kind of a, you know, synonymous with that organization. But it kind of brings us to think about big labor, which we don't talk about a lot. We talk about jobs data. We spend a lot of time on, you know, like we will tomorrow on the jobs, but not so much on labor and organized labor.
And the changing role of organized labor, especially in recent decades. And potentially a resurgence of it now in the wake of what's happening at Amazon and what happened at Amazon.
Yeah, I think that's one of the most fascinating areas. You think about Amazon, they're such a huge employer in this country, and they're growing like crazy. You know, they have so many fulfillment centers all over the country. Their trucks are all over the roads. It's just extraordinary, but they're not unionized. You know, and so if you're organized labor, that is the big prize out there for you. And so it was defeated once in Alabama, but now there's talk that, you know, there may be another test there. So that'll be extraordinarily interesting for Amazon, but just organized labor in general in this country.
Yeah. So we're talking about Richard Trumka, the president of the AFL-CIO for a long time, dying at the age of 72 today. He was elected to the AFL-CIO as secretary-treasurer back in 1995. He held that post until 2009. That was when he was elected president. That's according to the 12.5 million member Labor Union Federation. He was elected, Paul, the youngest president of the United Mine Workers of America at age 33 in 1982. Yeah. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500, NASDAQ 100 rising right around record highs. You have Wayfair, Datadog, and Uber Technologies, those shares all higher after their earnings reports today. 9 of the 11 industry groups in the S&P 500 are higher. Energy, the best performing sector. In Europe, the Stock 600 index that notched another record. You also had the economic data on new unemployment claims today. That suggests incremental improvement in the labor market. And the focus now turns towards tomorrow's non-farm payrolls number. We're going to get that from the Labor Department at 8:30 Wall Street time. The U.S. trade deficit in goods and services widening to a record in June. Consumer spending, business investment seems to have recovered. The NASDAQ Composite Index 101 points higher. That's up 0.7%. We're at 14,881. The Dow Jones Industrial Average up 185 points. And that is a rise of 0.5% right now. We're at 34,976. The S&P 500, 17 points higher. That's up 0.4% at 44.19. And the 10-year yield right now is up 3 basis points at 121. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Thank you so much for that update, John Tucker. Well, the U.S. economy is in the midst of a historic comeback. It's happening, though, with the lowest rate of labor force participation in more than 4 decades and a record number of unfilled jobs. It leaves economists, policymakers, and investors wondering, where have all the workers gone? Those are the words from Olivia Rockman. She's U.S. economy reporter for Bloomberg News. She's joining us on the phone from San Diego. Also, Joel Weber's joining us. He's editor at Bloomberg Business Week. He joins us on the Access line from Massachusetts. Yeah, San Diego. Nice. That's a pretty nice place to be right now, Olivia. I can speak like that as a Californian. Joel, where have all the workers gone?
It has been a question that companies and economists have just been obsessing about since the economy started to pick up steam. And there's help wanted signs. The biggest thing I've been seeing are like signing bonuses, and like this isn't like nothing. We're talking like thousands of dollars on up, and it's all an attempt to incentivize workers to come out of the closet because they have just literally, it seems like they've gone missing. But it turns out that it's not quite as big of a mystery as it might seem, and that Olivia sort of helped do some sleuthing and figure out what was at the bottom of it. And Olivia, I'll turn it over to you, but part of this is frankly just because of boomers, right?
That's right. So one of the big factors is that boomers retired at double the rate that they did in 2019 last year. And so we have this highly productive group of workers that now is basically out for good. And then at the same time, we're seeing the birth rate decline, and we're not seeing young people enter the workforce at as fast of a rate as those generations before them did.
Well, you know, Olivia, Al from Jersey called me and said, get back to work. So here I am back to work. But one of the issues that I think some people may have is maybe their skills just kind of lapse here, and they might not be as employable as maybe they were when they were in their workforce. And I'm thinking maybe about some of the older demos. What are you finding as it relates to ages?
So it's, of course, historical that employers discriminate against people who are older when it comes to hiring because they know they won't get as many years out of that worker. At the same time, while skills may lapse when you spend more time out of the workforce, it also means that if you've had these long resume gaps when you're applying for a job, employers often, vet those resumes out or aren't as quick to hire. And so it makes it harder for people to jump back into the workforce the longer they've been away.
So what do economists and analysts who you speak to say needs to happen when it comes to policymaking decisions to encourage employees to get back to work?
There are a number of factors here. So one of them that we've kind of found over the last 6 months or so is a childcare problem. And so parents, particularly women, left their labor force at high rates, and some see the cost of childcare and they say, you know what, why go back at a low wage when I can just save on that cost? And so some of what Biden has proposed in this trillions of dollar package is childcare accessibility. So that's one thing. Another thing is the opioid crisis. That's caused a lot of people to leave the labor force. And again, that takes a crackdown on, rehabilitation and help for these individuals. So there's so many categories, and each one sort of has its own policy structure around it.
I want to talk more about the opioids because when you think about the scale of an epidemic like it was and predated this pandemic, obviously, it's easy to maybe think like it wouldn't have had as big of a dent as it seems to be having. So, like, how are economists looking at the implications from opioids? How big is that in terms of the missing element in this labor force?
So drug overdose deaths in particular rose by 30% last year. That's a huge increase from the years prior. In fact, opioid deaths had been kind of plateauing and have now increased again. And the problem there is that in areas where addiction rates are higher, we see lower rates of labor force participation. And so as this spreads, it sort of worsens the issue. Like we've seen in DC, for example, it's been a huge problem for many of the employers there.
And so when you think about what can be done, I mean, like how do you get on the other side of this from a policy perspective?
So, of course, as I mentioned, Biden is proposing this massive infrastructure plan, which has many different components that are aiming to help get people back into the labor force. But as we say in our story, labor force participation is at a 40-year low right now.
That's amazing to me, right? Like, we're back to the 70s.
Exactly. And the 70s was a time in which we had a historic recession, inflation was high, and there were cultural differences then as well. And so while we did sort of climb out of the pandemic low, we haven't seen a lot of progress in labor force participation since August of last year. And so it's going to take a lot for policymakers both on the Fed side and on the White House side to come up with solutions to get people to start working again.
The 70s were quite good for me, I'll just point out. All right, let's talk automation here, Olivia. When I go to the CVS and get my 4 or 5 items, I just scan it myself and skedaddle. I mean, so that's got to be an issue.
What's really interesting here is in prior recessions, we always saw automation coming in kind of to replace manufacturing jobs, factory jobs. But because of the health crisis, we've seen automation now replacing service workers as well, whether that's in food service or, as you mentioned, at a CVS or a grocery store. And so we've sort of seen what happened in prior recessions now accelerate on the automation front. And in the U.S., we really don't invest that much in reskilling, which would help people who've lost their jobs to robots kind of get back into the workforce. And so that's really where we're lacking in that area.
Hey, Olivia, just in the last 30 seconds that we have with you, the jobs report tomorrow, it's expected to show that the U.S. added just about 875,000 jobs in July. What's the number that you're going to be paying attention to, though?
Well, this story is all about labor force participation, and economists are estimating that labor force participation is going to barely move upward. And so, that's going to continue to point to this trend that there's going to need to be more happen on the policy front to get us back.
Olivia Rockman is U.S. economy reporter at Bloomberg News. She joins us on the phone from San Diego, along with Joel Weber, editor at Bloomberg Business Week. He's joining us from Massachusetts. Olivia's story is featured in the current issue of Bloomberg Business Week magazine. You can read it now at the Bloomberg Terminal and on Bloomberg.com/businessweek. For those of you listening in New York, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker at the Bloomberg Newsroom with his Bloomberg Business Flash. Well, the major stock averages in the U.S. higher right now after the Europe Stock 600 hit a record today. The NASDAQ Composite Index at an intraday record. S&P 500 just shy of one. Its best performing member today, Penn National Gaming, agreed to buy Score Media and Gaming for about $1.74 billion in cash and stock. What they're doing is moving to expand in the North American sports betting market, which is pretty fast growing. Those shares up over 9%. At Principal Global Investors, the chief investment strategist there is Seema Shah, and she remains bullish on U.S. equities.
So we are still very much risk on. We still think there's a lot to play for within equities. And if we look at the fundamentals, earnings growth has been fantastic. We're seeing companies showing real pricing power, which does fill us with some positivity going forward.
And more earnings to tell you about. Allstate shares, they're falling today. The economic reopening prompted a jump in car accidents, so that's an insurance claim soaring. Auto property damage, gross claim frequency in the second quarter, as they call it, up 47% compared to the same quarter last year. Second quarter earnings per share topped Wall Street expectations. The Cigna shares, they're down the most in more than a year. The health services company said the pandemic drag on its earnings this year will be double what it had previously projected. Dow Jones Industrial Average up 194 points. That's up 0.6% at 34,986. S&P 500 17 points higher. That's up 0.4% at 4420. And the NASDAQ up 99 points, a rise of 0.7% at 14,879. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, Paul Sweeney sitting in for Carol Masser today, along with Tim Stenovic. Boy, media M&A is alive and well, and that whole concept of content is king is absolutely making itself known. And I always describe that term, content is king. It's widely used, but I ascribe it to Sumner Redstone, the media mogul. He used to just say that all the time because he owned a lot of content. But let's take a look at some of these deals with Jerry Smith, media reporter for Bloomberg News. He joins us on the phone from New York City. So, Jerry, first we had Reese Witherspoon selling her Hello Sunshine Media Group to $900 million. I think there's some PE folks. And then just today, South Park's creator signed a new $900 million deal with Viacom CBS. What's going on out there? It seems like an arms race.
Yeah, that's absolutely right. I mean, there's a real land grab right now for high-quality programming as all the big media giants and tech companies are trying to, fill their streaming services with as many TV shows and movies as possible.
So this new deal, Jerry, it runs through 2027. It covers 6 more cycles of South Park. It includes 14 made-for-streaming movies. That's the part that really stuck out to me. So these are for Paramount Plus, because it's really confusing because you can watch South Park on HBO Max.
Yeah, that's right. I mean, it's an example of just how, splintered this whole streaming world is, where, the old episodes of a show might be on one streaming service and the new reboot of a show is on another. I mean, there's another example where Peacock is doing a reboot of the Fresh Prince of Bel-Air, but the old episodes of Fresh Prince are on HBO Max. I think Viacom CBS, their deal with the South Park creators runs longer than their licensing deal with HBO Max, and I think the strategy there is eventually those shows, those old episodes of South Park end up on Paramount Plus, along with all the new shows and movies that the creators are making.
Jerry, I'm getting to the point of being, and I'm a media analyst, I've covered this stuff for 35 years, of getting completely overwhelmed by the choices out there. But I can report that after, again, 35 years, I finally cut the cord for no other reason than we sold our house. So, but it's interesting here. What do you think is next? I mean, are we going to see more and more of these A-list people, kind of go out there and try to form production companies and build up some content and sell out?
Yeah, I mean, this is really an incredible time if you are, independent studio. I mean, LeBron James's production studio is also exploring a sale. I think that there's, these streaming services, they just need more and more programming, and certainly this in-house studios are making a lot of it. But if you're an independent producer, you have your phone is probably ringing off the hook right now with streaming services that are looking to do deals with you.
Well, to that, and Jerry, you have a new story out in Bloomberg Business Week, the current issue. It's all about none other than The Daily Show's Jon Stewart. He's going to Apple TV.
This is cool.
Yeah, this is cool. And this is interesting because I remember years ago, this was, 2015, Jerry, where HBO signed a deal with Jon Stewart after he was on Comedy Central, and nothing ever came of that.
Yeah, that's right. He had an idea, a very ambitious idea, to do some sort of animated show related to current events, and it just died in production. But yeah, he has a new show that's coming out on Apple TV Plus next month. It's going to be a little bit different format than The Daily Show. He's going to spend an hour really doing a deep dive on a specific topic. He hasn't said what those topics are going to be yet, but it sounds similar to what John Oliver does, a former colleague of Stewart's from The Daily Show. John Oliver has a show on HBO called Last Week Tonight, where he, spends much of the program just doing a really in-depth piece on a specific topic. But yeah, I mean, Apple TV Plus has sort of flown under the radar in the whole discussion about the streaming wars. Certainly, Apple has very deep pockets, but its streaming service, the library, is a lot thinner than Netflix or HBO Max. But they certainly, they have a hit show right now, Ted Lasso. Everybody seems to be talking about Ted Lasso. And this Jon Stewart show, I know they're hoping that that's going to be generating a lot of buzz. And it's an important moment for Apple TV Plus, because a lot of the people who signed up got 1 year free trials, and those were extended and extended again, and now they're starting to wear off. So, Apple TV Plus really needs some compelling content to keep people around once their free trial ends.
Yeah, I mean, it's not for lack of resources, right, Jerry? I mean, you think about the balance sheet of Apple. If they really, really wanted to get in here, there's no stopping them. Do we have any idea of the terms of this Jon Stewart deal?
He's going to be producing other programming for Apple as well, I think. But it's definitely, Apple is, as you said, they've got very deep pockets. I think everyone in Hollywood has been waiting for them to start taking some big swings. They have Oprah Winfrey. They have a lot of really big name talent, that are making shows and movies for them. And I think it's, the Jon Stewart show will be a really interesting example also because, that the whole late night comedian talk shows haven't always translated well on streaming services. We haven't seen anything that's really broken through in the same way that, the broadcast networks with the Tonight Show, that they have. So it'll be really interesting to see, how Jon Stewart's show does.
Hey, Jerry, can't let you leave without talking about Viacom CBS, because I know you were up early covering those earnings today. Shares of Viacom CBS higher by more than 7% right now. What's the headline there?
Well, certainly streaming. They're starting to see some traction with Paramount Plus. They're starting to expand internationally. They announced a big deal where they're going to be launching Paramount Plus on Sky's European networks. That's a deal. Sky is owned by Comcast. There was a lot of chatter about maybe Comcast and Viacom CBS could do some sort of M&A, but at least for now, it looks like they're just going to be partnering on launching streaming services in Europe. Right. Also, the ad market is bouncing back. Last year, advertisers really pulled back at the height of the pandemic, and now they're starting to spend again. And every media company now is, saying that the market's bouncing back.
Amazing, good stuff. Jerry Smith, media reporter for Bloomberg News, joining us on the phone from New York. Lots of M&A, some acquisitions, looking for content in the media world. Right now, let's get a check on the latest world and national news with Karen Chase in the Bloomberg 1130 newsroom in New York. Karen.
Good afternoon. New York lawmakers will soon consider impeachment articles against Governor Andrew Cuomo, and they've told his lawyer their investigation is nearing an end. But a vote on possible impeachment is likely weeks away. State legislators are fast-tracking the process, but they've given the governor until August 13th to submit evidence. Dr. Anthony Fauci, the president's chief medical advisor, is pleading with Americans to get vaccinated, saying the more the virus is allowed to spread unchecked, the greater the chances of a new and more dangerous variant to develop.
Viruses cannot mutate unless they replicate. And so the easiest way to prevent the scenario that you're proposing would be to get as many people vaccinated as quickly as we possibly can, to not allow the virus to continue to circulate in the community, giving it ample time to mutate.
Dr. Fauci says work is now being done on a possible booster shot for the immune-compromised. In Florida, hospitals are packed to the hilt and using every available space they can find, including hallways and conference rooms to house patients. One hospital administrator said they only have so many beds. Some are canceling elective procedures. And weekly jobless claims are down for a second week, falling below the 400,000 mark. A year ago, before the vaccines, claims were running in the millions. The government will issue its monthly labor report on Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Tim. Earth-shattering news in the world of global football/soccer. The New York Times is out with a report. The soccer superstar Lionel Messi will leave the only club he has played with since he was 13. That would be Barcelona. The team officially announced his departure. I'm not like a crazy, European soccer person, but I know how big Messi is. He's
huge.
He's the best player in the world, is what I'm told, and he's been at Barca again his entire life. They've won a gajillion and one trophies. He's just so aligned and with that team, so identified with that team, and that team has benefited so much from his great play over the years that this is a big change. And Maria Tadeo, who is a Bloomberg News reporter based in, I think,
she's in Brussels.
Brussels, okay. She is Spanish, and her little message to all of us in Bloomberg News is she says that this is over pay limits in the Spanish league. She says it is an earthquake for the football industry in Europe. So really big news in the global football.
I'm told
news.
she's a fan of Real Madrid.
Oh, is she? Oh,
yeah, that's what I'm being told.
Yes, okay.
Yeah, I wouldn't want her. I wouldn't want her to weigh in. The team said in a statement on its website, quote, "Despite FC Barcelona and Lionel Messi having reached an agreement and the clear intention of both parties to sign a new contract today, this cannot happen because of financial and structural obstacles."
It looks like La Liga rules, La Liga being the Spanish league, limit each club spending to a percentage of club revenue. And so I guess there's certainly just a limit that they can pay. And if that's not, I'm sure that's not in line with what Mr. Messi is looking for in terms of compensation. Therefore, they got that split here. So economics, finances, as usual.
Yeah, if you're just joining us, the New York Times breaking the news that Lionel Messi is not going to be returning to Barcelona, a soccer superstar who has been at this club since he was 13 years old, Paul.
Yeah.
Unbelievable.
They just get the talent from all over the world, and they bring them into their academies, and hopefully they develop to be on the big team. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. This on a day when the major averages, they are all in the green. Time now to head over to the Bloomberg First Word breaking news desk for today's afternoon call. And here's Bill Maloney. Hi, Bill.
And good afternoon, John. That's right. U.S. stocks with a bid today, with the Dow currently up 188 points. The S&Ps are up 17, and NASDAQ rises by 88. The U.S. 10-year yield now 1.22%. Gold is down 8. Transports rise 130, and Bitcoin is now up 3%. Among the main 11 S&P sectors, only healthcare was in the red, and leaders in the Dow, Disney, and Salesforce, while UNH led to the downside. After earnings, Cardinal Health plunged 14%, and in deal news, Penn National is buying Score for $1.74 billion. And on the IPO front, grill maker Weber went public today at 14. In other news, Cigna fell 11% on the prospect of a higher payout for medical claims, and BlackRock and Wells Fargo delayed the return to the office on Delta fears. Wrapping things up, Beyond Meat, Carvana, and Dropbox. I'll report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. John?
All right, thanks, Bill. And here live breaking news over your Bloomberg-type squawk on your terminal. Dow Jones Industrial Average, once again, 182 points higher at 34,974. The S&P 500 up 16 at 4418, and the NASDAQ 86 points higher, 14,866. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Thank you so much, John Tucker. Taking a look right now at the real-time price of Robinhood, ticker HOOD. Down 22% today. That follows 3 days of gains. Still, though, trading at $54 a share, significantly higher than the IPO price of just a week ago. The reason for this decline today, investors filing to sell stock, venture capitalists who are cashing in billions of dollars after Robinhood's increase in share price in recent days. Annie Massa is investing reporter at Bloomberg News. She joins us on the phone from New York City. Annie, it's the sell-off has accelerated since we last spoke on Quick Take a few hours ago. Is this just a result of the volatility that we've seen in Robinhood in the last 6 days?
It's a real reversal from what we were seeing earlier this week. As you mentioned, we had a 3-day stretch earlier this week when Robinhood's price doubled. And that in itself was a turnaround from IPO day when it sold off. So you've seen these big swings in Robinhood over the course of the past week, and it's only been a public company for a single week.
Yeah, Annie, what jumped out at me was the lockup or lack thereof on any of my equity deals. You'd have to have a 6-month lockup here, but these guys didn't. Why not?
So this is a bit different. Some of the reason that we've seen this sell-off today, and one of the surprises that came out this morning, was you're seeing some of the big venture capital backers of Robinhood getting the opportunity to sell shares to the tune of 98 million shares. Now, that's not all happening at once, but they do have the ability to do that. And as you mentioned, in a typical IPO process, those lockups are in place to kind of stabilize the price of the stock once it's public. And Robinhood had a couple other factors in play here. They had an unusually large allocation to retail. They have these provisions for their venture backers who, as you remember, kind of bailed them out earlier in the year during the GameStop and AMC volatility. They raised an emergency more than $3 billion, nearly overnight from their VC backers. So that those dynamics are a bit more unique to Robinhood.
Annie, even though Robinhood stock is down 22% right now, over the last 3 days, it's higher by more than 40%. Do we know why the stock moved higher so quickly? Is this a meme stock now, basically? That's what it seems like.
It does.
It's like nothing fundamental has changed, right?
Right.
It does seem to have some of those meme stock characteristics, just seeing those crazy swings with no real fundamental change that we can identify, and the big retail participation. Something that's interesting about these dynamics with Robinhood right now is there wasn't as much retail activity on the first day of trading, but it's picked up pretty considerably in the past couple of days, even becoming the fourth most traded stock on retail trading platforms yesterday. So, I mean, the retail action has definitely arrived. It just arrived a few days after the IPO.
Yeah, I'm looking at the volume here. Over 64 million shares have traded so far today. That feels like retail to me. Annie, has a company commented at all about their stock price, movement over the last several days?
They haven't commented on it. They've only pointed to statements that executives have made in the past about how they're keeping their eye on the long term here. Still, you have to imagine that at Robinhood headquarters or working from home, they're keeping an eye on this share price because yesterday the stock was halted multiple times for volatility. So that's not the type of thing you can entirely ignore.
Yeah, that's just in the first. That was just in the first, like the first 11 minutes of trading, I believe. It was a wild ride. Annie, what's the next catalyst that we should be looking for Robinhood? I mean, since it's a meme stock, I hesitate to even ask the question because there's no sort of rhyme or reason as to why it moves. But given that we got this filing earlier today that sent the stock price plummeting, what are you on the lookout for?
One important thing that we haven't touched on yet is that options on Robinhood began trading yesterday. So those lag a couple of days behind the day that the stock started trading. So that may have amplified some of the volatility that we saw. And, hundreds of thousands of options were trading hands yesterday. So that's added to the action. But one other thing to look out for in the future is the resolution of some of the regulatory inquiries that they've revealed, even in the couple of days leading up to the IPO. There are still very much open investigations, so that's something to keep an eye on as well.
Annie Massa, investing reporter for Bloomberg News, joining us on the phone from here in New York. Paul, it's wild to see this because it's a little meta to think that the stocks that are traded on Robinhood, right? This is the company that a lot of people said, okay, well, we have meme stocks because they're so easy to trade. It's frictionless. And then Robinhood itself becomes that meme stock.
Becomes one of those meme stocks. And boy, you talk about the no-fee trading has really brought on the retail trading, and that's really been an aspect of this market that we hadn't seen really in prior rallies. So really interesting.
This is Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Paul Sweeney in the Bloomberg Interactive Broker Studio. It is 3:31 on Wall Street, and that means that we are just minutes away from the chart of the day, the stock of the day, and are we going to get it today? The song of the day?
We have a one-day winning streak, so let's see if we can continue that. Dave's shaking his head. I think he doesn't have much faith.
Yeah, he'll probably stump us with it. Let's get a check on the latest with the trading day before the market closed. Hey, John Tucker.
Yeah, Tim, all the major averages higher right now. The NASDAQ Composite Index, in fact, at an intraday record. Wayfair rising the most intraday in 5 months, up 10%. The e-commerce company's second quarter profit beat the average analyst estimates. 10 of the 11 major industry groups in the S&P 500 gaining right now. You have energy, that is on top, leading the way. Biggest drag coming from healthcare stocks. Investors saw some disappointing earnings at Cigna and Cardinal Health. They showed some continuing effects of the COVID-19 pandemic. As the Delta variant of the virus spreads, how worried should people be, and what do they need to do? We put that question earlier to Gigi Granville, the senior scholar at the Johns Hopkins Center for Health Security.
They don't need to fear variants. They're not magic. From a broader perspective, from public health, these variants are making the disease harder to end. It's making the pandemic harder to end. But all the things that you can do for Delta, all the things that you should have been doing for Alpha, they still work. You still need to get vaccinated, use a mask in areas of high transmission.
Amazon.com says corporate employees won't have to return to the office on a regular basis until January, becoming the latest big company postponing its resumption of regular work habits as infections for the Delta variant surge in the United States. Once again, the Dow up 203 points, NASDAQ Composite Index up 86, the S&P 500 up 17 points. 10-year yield, 121. That's up 3 basis points. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Thank you so much, John Tucker. This is Bloomberg.
Gotten that.
Okay,
I
fine.
definitely wouldn't have gotten that.
Well, there you go.
It's a song, you know it when you hear it, but you couldn't.
Yeah, you have no idea who it is.
Yes,
Okay.
exactly.
Yeah, some songs are like that for whatever reason.
How does it connect to the chart of the day, Dave?
Well, you know, the time has come for a change when it comes to the most interest rate sensitive areas of the market. At least that's what Jonathan Krinsky over at Baycrest Partners is saying. He's that firm's chief market technician. And what he did was compare real estate and utility stocks. Now, we tend to think of them as sort of moving together because they're both relatively influenced by rates. I mean, you're talking about companies that borrow a lot of money, that pay relatively high dividends, and for those reasons, tend to be thought of as interest rate sensitive. Here's the thing, though. If you look at a ratio between the S&P 500 utilities and real estate indexes, and this is something I put together, you go back to a high in October, you see it's down 25%, or at least it was through last month when it reached the lowest level since 2007. So the question becomes, what happens now? And Krinsky's take is it's time for a reversal. The time has come today for utilities to start showing some renewed strength. As he put it, they're coiled and ready for a breakout, while real estate stocks, to quote him, are looking tired. Now, why would you have seen the relationship be as it was? Real estate. Here we are talking about companies deciding not to send employees back to work because of COVID-19 issues. I mean, there had been some anticipation that it would change, that you would get more folks back in the office. And, you know, a lot of these real estate companies own office buildings or stores or whatever, and that they would benefit as sort of things opened up. So, you know, you can kind of throw that into the argument as well, I suppose. But however it plays out, you know, if you haven't seen the chart, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, what's this telling us about? Well, you know, it's actually, you know, when you were talking about this, I was thinking we've had two Drive to the Close guests recently who've both recommended PG&E, Pacific Gas and Electric. It's kind of a different story because it was in bankruptcy. It's the association that it has with the fires. But it made me think of that because, as you say, the time has come.
Well, at least for some people it has. Whether in fact it plays out is another
these charts
story
don't
altogether.
These charts don't go into the future, right?
No, of course not.
That's the
you
problem.
know, and remember the old saying: past performance is no guarantee of future results. You know, I mean, that said, you look at the S&P 500 Utilities Index, you see a dividend yield of about 3.1%. Stack that up against the 10-year Treasury, which is at more like 1.1%, and that's just sort of a sign. Well, 1.2. Right. Okay. You know, a bit of a rounding error there, but in any case, you know, it does show you that there is still an argument for buying these shares. And when you stack it up against the S&P 500 Real Estate Index, you're talking 2.3% there. I should note specifically that Krinsky recommended buying the Utility Select Sector SPDR Exchange Traded Fund and betting against the iShares U.S. Real Estate ETF. So we're talking, you know, if memory serves, XLU and IYR. Those are the tickers.
All right, speaking of tickers, give us the stock of the day.
All right, Houghton Mifflin Harcourt, HMHC. This
Textbooks.
is, yes.
Yes.
And
You
of
sound like a
course,
media
because
analyst.
we live online these days, you know, they also do a lot of content for the internet. Put it all together, though. I mean, this company had a heck of a second quarter. You know, when you look at their adjusted earnings, $1.81 a share, analysts expecting a loss of 19 cents on average, and sales, you know, well above the average projection too. So, and they raised their forecast for billings. So, money, we're talking about bills going to schools or whoever for the year. So when you put that all together, you're talking a stock that's up more than 18% in today's trading and has risen to its highest price in almost 5 years.
I was going to say, this is a stock, I've known it for 35 years, but I kind of left it for dead. But boy, they made a turnaround.
They sure have, when you consider these shares have more than quadrupled this year.
Yeah, look at that, 316% increase. Dave Wilson, stocks editor at Bloomberg News. Let's get a check of the latest world and national news with Karen Chase in the Bloomberg 1130 newsroom in New York.
Good afternoon. Surrounded by executives from the major Detroit automakers and the United Auto Workers Union, President Biden at this very minute is signing an executive order calling for half of all vehicles sold in the U.S. to be emission-free by the end of the decade, an ambitious goal that automakers say can only be achieved with a bigger government investment in charging stations. The FAA is fed up with the growing number of unruly passengers being pulled off planes, especially since they rarely face prosecution. Bloomberg's Nathan Hager tells us the agency is calling for justice.
The agency is now calling on the nation's airports to encourage police to arrest unruly passengers and stop them from sneaking alcohol on board. In a letter to airports, FAA Chief Steve Dixon says they get reports every week of law enforcement meeting aircraft at the gate, in some cases after flight attendants reported being assaulted, only to see passengers briefly interviewed and released without charges. The FAA has declared zero tolerance for misconduct and has pursued dozens of civil penalties. Last month, Bloomberg News reported criminal cases are relatively rare in the air. In Washington, I'm Nathan Hager, Bloomberg Radio.
New York City, once the epicenter of the COVID pandemic, is hitting a plateau and vaccinating enough of its population against the virus. In Far Rockaway, Queens, only 34% of residents have been vaccinated. And in the NFL, vaccination rates are soaring to 90%. Recently, the league imposed new rules mandating that teams forfeit games that are canceled by COVID. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Thank you so much for that update, Karen Chase. Tim Stenevec and Paul Sweeney in the Bloomberg Interactive Brokers studio in New York. Paul, how does a 414-foot super yacht sound to you?
I'm in the market for one of those, but somehow I think I just missed a big trade that went. Paul Allen's super yacht, it did find a buyer for $278 million. And in the Bloomberg article, what I didn't know, I didn't even think about it, it's apparently the super yacht, we're talking, longer than 100 feet or meters or whatever it is, it's a very hot market right now.
It is described by our own Benjamin Stupples and Devin Pendleton as a record hot market for the world's largest luxury boats. A surge in personal wealth due to buoyant markets and a newfound interest in private, socially distanced leisure among the ultra-rich. They are driving unprecedented numbers of sales of both new and used super yachts. It makes sense if you think about where we are right now. The way that the markets and the way that during the pandemic, the ultra wealthy have done so well.
They have.
And they're looking for places to go that aren't around other people. What better to do that on than a super yacht?
And this super yacht is more super than some of the other super yachts. It can go 9,000 miles between refueling. So you don't have to see people for a very long time out at sea. First it was jets, then super yachts, then spaceships into space. So I guess that's what folks, the super elite, rich, wealthy, whatever you want to call it, that just goes to that wealth inequality issue that you just shake your head at every time you see stories like this.
Well, I have some good news for you. If you don't own it, if you weren't the undisclosed buyer, you can still hire it.
Oh, nice.
Yeah, you'll be able to. The new owner intends to make Octopus available for hire for the first time from next year through the yacht firm Camper & Nicholson's. That's according to the Super Yacht Times, the outlet that first reported this sale. So you don't have to buy it if you want to get on the Octopus.
But if it doesn't have a helicopter, I can't take it.
Yeah, that's a good point.
I need the helicopter.
You know what? This is among the most read for a reason. It's a fascinating story. Check it out at Bloomberg.com and on the Bloomberg terminal. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom for this Bloomberg Business Flash. This on a day when the major averages all higher. The NASDAQ hitting an intraday record. This all comes after weekly data suggested employment in the U.S. beginning maybe to stabilize. Data showing the number of Americans collecting jobless benefits falling to its lowest level of the pandemic. Now, this comes ahead of tomorrow's closely watched non-farm payrolls release. The U.S. Labor Department reporting 385,000 initial unemployment applicants for the last week. Goldman Sachs' Wall Street's climb has further to go this year. Analysts at the bank estimating the S&P 500 would gain a further 7% by the end of this year. And Apple is moving to scrutinize explicit photos. The company says it's going to launch new software later this year that will analyze photos stored in a user's iCloud Photos account for sexually explicit images of kids and then report instances to relevant authorities. S&P 500, 21 points higher. That's ties for an intraday record, if I'm not mistaken. 44.23 right now, up 0.5%. The Dow up 223 points. That's up 0.6%. We're at 35,016. The NASDAQ intraday record there, up 94 points at 14,874. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, here we are looking at these markets at or near record highs once again. You know, a lot of folks are debating whether to stay in a growth trade that's worked for such a long time, go with a rotation trade into more cyclical names, and that's kind of been a little bit of discussion within the equity markets. Let's check in with our next guest, see where they come out. Sandy Villery, portfolio manager, Villery and Company, with $2 billion in assets under management, joining us on the phone in New Orleans. Sandy, thanks so much for joining us. I'd love to get your thoughts on kind of maybe where you're leaning, where you shake out in terms of this growth versus the rotation into maybe more value, cyclical. Where are you guys?
Yeah, I mean, thanks for having me, by the way. And I would say that, you know, when you look at something like the 10-year Treasury and it's down where it is, it starts to make us a little bit nervous. I mean, basically that's telling you, I mean, the bond market tends to be smarter than the stock market, and it's kind of telling you that, you know, growth is going to slow. So, you know, we kind of think we want to take some profits and maybe some technology stocks that have done quite well, probably on the growth side, as, you know, they've got a nice tailwind with rates coming down. And if our belief is that rates can pop up, you know, perhaps by, you know, the end of the year when maybe this, you know, Delta variant gets behind us and maybe it peaks out here over the short run, then we want to switch into things like financials and maybe more cyclicals that could, you know, be in some trouble over the short run as rates are going down, but then look to reverse. So we kind of want to be a little bit contrarian as to kind of where all the, you know, the masses are headed right now.
Does that picture change at all tomorrow if we get a huge beat with the jobs report?
Yeah, it's interesting because, you know, we saw, you know, June comes in at 850,000. Hopefully we get near this 870,000 number for July. But the question is a bad number actually good news for the stock market? Because, you know, you could have, you know, a situation where maybe we start to taper a little bit, you know, sooner. Maybe we start taper by the end of the year, or maybe we don't. So I think a bad number could lead you towards, you know, the Fed being, you know, kind of staying a little bit more dovish longer than what people are expecting. So if you want more you know, more juice from the Fed, then maybe you want a little bit of a bad number. It's interesting.
So, Sandy, I'm looking at the Russell 2000 today, up, having a very good day, up about 1.7%. I know historically you guys have favored small cap stocks. Is that still the case? And what sectors are kind of interesting to you guys?
Yeah, no, we do favor small caps. We just think over the long run, it certainly gives you the opportunity to have a company bought out, or it gives you hopefully we're trying to find that company that becomes the next Amazon or Walmart, if you will. So we definitely like to be in the more smaller cap names, and I think we are trying to take advantage of with things like financials that are a little bit again under some pressure with falling rates and having a more difficult time with their net interest margins, et cetera, trying to take advantage and being a little bit contrarian. And then we also want to buy some things that are a little bit maybe tied to the reopening of the economy that all of a sudden are under pressure because of the Delta variant and some uncertainty. So we love some names that are more cyclical and tied to the reopening. We're just looking towards maybe buying them maybe in the lows in August or September. I think August is maybe the third worst month for the market since the 50s, and I think September is the worst month. So maybe we get an opportunity to buy some things a little bit cheaper if we're patient and sell into the strength with firms like Goldman raising their price target on the S&P to 4,700 and getting everybody excited. I think an opportunity to sell into that and look to buy things maybe a little bit cheaper in some more volatile days in the months ahead.
Yeah, perhaps. I mean, we're only 5 days into the month, not even 5 trading days into the month, and the Nasdaq's already higher by 1.4%. The S&P higher by close to 0.7%. So we'll have to wait and see. Sandy, what would be that thing that sends markets lower? We haven't had a 5% pullback in close to a year.
Yeah, no, I think if you saw, all of a sudden we're going to taper maybe a little bit sooner. I think people do expect, the Fed to stop buying the 120 billion of Treasury and agencies each month, and perhaps if we, if that becomes more concrete, that could start, by the end of this year, perhaps, the stimulus party isn't over, but maybe they start to flicker the lights, a little bit faster, and so I think when the Fed, starts to react more and really truly becomes, a little bit more hawkish, then that could be, something that they could send the market, a little bit further south.
Sandy, one of the names that you've written up is Caesars. I'm a big fan of the gaming industry. I'm just fascinated by the economics and the financials there. Give us your call on Caesars here. It seems like it would fit in with your thesis of a really good reopening play.
Yeah, and these guys have done an amazing job. I mean, sometimes you bet on the horse and sometimes you bet on the jockey. And Tom Reeg has just been an unbelievable operator. He came from Eldorado Resorts and has done some great things with, Isle of Capri and Tropicana and things like that. And so he actually came in and bought Caesars, and he's already, cutting expenses and doing these things that are incredible to get his, hopefully long-term operating margins up to 40%. And still they're talking about $10 of free cash flow a share is certainly in play in this sector. It kind of trades at 11 to 13 times. So you could be looking at $120, $130 stock. He is very committed to, the online gaming as well as, as well as sports betting, and $4 billion acquisition of William Hill, which is the third largest sportsbook operator in the country, is all going to be run through Caesars. And then you get the 60 million total rewards customers is just an amazing feat. So I think these guys have a lot of. I still think it's very early in what he's capable of doing, and he's just had such a good track record that we're excited about owning that name, especially if you get a sell off. If people get worried about casinos closing and things like that, that's just going to be a great opportunity over the next 12 to 18 months.
What about a bank like First Hawaiian?
Yeah, I think that's a similar situation where if you can get if you can get into a maybe a more reasonable valuation with again with interest rates falling here and really hurting financials, these guys have a 3.8% dividend yield and looks very good when you're comparing it to a 1.2% 10-year Treasury. These guys never took TARP. Pretty conservative. Back in the financial crisis, never took TARP. Founded in 1858, so really kind of a duopoly with Bank of Hawaii, and they're also sort of a play on not only the military that's over there, but also the reopening and tourism coming back. And I think it's one that doesn't seem to me to be real risky at all, but certainly offers a lot of upside should you see rates drift higher as we get past this Delta variant.
Sandy Villery, portfolio manager at Villery and Company, $2 billion in assets under management, joining us this afternoon from New Orleans. Sandy, thanks so much for taking the time. Well, we are just about 2.5 minutes from the close of trading here. And Paul, looking like the S&P 500 taking a real leg up at the end of the day.
Yeah, and Sandy was talking about those reopening trades. I was looking at some of the airlines and the cruise ships, which are classic reopening trades, and they're all having a very good days today. So despite the Delta variant,
I don't get it.
I don't get it either. It's this whole stock market thing, you know.
Right. I mean, maybe the market is saying this isn't going to be that big of a deal.
Yeah.
That's certainly what it seems like. Coming up next, it is Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. It's on YouTube, Bloomberg Radio, and Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell, our global simulcast, Tim Stenovic, Paul Sweeney in for Carol Master today, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide. And Tim, it looks like it's going to be a record day, at least for two of the most important indices out there.
Yeah, and the S&P 500 stocks really taking a leg higher at the end of the day, just in the last few minutes. What's so interesting to me to see on a day like today is that there's this disconnect between what the equity markets are doing and what we're hearing from companies and seeing when it comes to COVID data. Look, we know that markets are forward-looking, but the signal that the equity market is sending is that the Delta variant, despite the fact that companies are like Wells Fargo and BlackRock are saying, do not come back to the office, wait another month, perhaps will not be that big of a deal.
Yeah, I mean, you look at some of the sectors that have been performing well. It's some of the reopening trades that we're all familiar with. You think about the airlines, the cruise ships, all moving higher today, noticeably higher today. So that kind of flies into the face of all the concern about this Delta variant, but the market looking ahead, and certainly good earnings continue to come in for the S&P 500, pushing valuations, pushing stocks higher, despite some tough valuations.
Although, when you're looking at a points basis, what's dragging us higher in the S&P 500? Microsoft, Facebook, Nvidia, Amazon, Google. Seems to be like a lot of the stay-at-home trade, the one in 2020, they're still all winning in 2021 on certain days, Taylor.
And that really ties into a note. I know that we on TV have been talking about it all day, Romaine, with the Goldman note of not only better earnings, but these theme of lower for longer yields, how much, of course, benefits some of these big tech companies given the cash flow streams that they have, given, of course, they're weighted in the index that Caroline rightfully said. That's really pushing it higher. Really goes in opposite of the call from Citigroup as well.
Yeah, the median estimate here in a Bloomberg survey, 4,300, average 42.42, the highest 46.01. Of course, that was until we got that note out of David Costin, 4,700 on the year, 4,900 for 2022. As for today, this Thursday here, the Dow Jones Industrial Average going to finish the day higher by about 272 points, 0.8%. S&P 500 up 0.6%. That is, I believe, someone can double check me, that is a record high on the day. The NASDAQ Composite also at a record high, up 0.8%, right around 14,895. The Russell 2000, of course, still far off its record high, but it is by far the outperformer on the day, up 1.8% here on the day. So relative outperformance here with some of those cyclicals, some of those small cap names, Taylor.
Yeah, Romaine, this is something that you mentioned the Goldman note. I want to go back to this because this is a big deal. This is something that we've been talking a lot about on the radio as well. The strategists raising their year-end target to 4,700 from 4,300. That right now would represent a return of just about 7% by the end of the year. As you mentioned, the highest forecast along with Oppenheimer's. This is a bullish forecast for the S&P 500 for the last few months of the year.
Yeah, well, we're getting certainly a bullish forecast, at least on the day, Tim, as we take it back to where we are on an individual sector levels. We've been looking at some of the major indices for our radio audience. I mean, look, it is mostly green on the screen. Everything is green except for the two red in the bottom for the loser sector. So it really has been food and staples and banks and insurance and utilities. This is interesting because yields are actually rising on the day, but those sectors are up 1 to about 2.25%, different than what you would expect on a day of the reflationary trade. Tim, I take you down to the bottom of the screen for our radio audience. There are two losers only. It's semiconductor and hardware equipment. So it really seems to be in this particular sector, that individual tech sector seems to be selling off a little bit.
Meanwhile, we get some numbers. Of course, the drip feed of second quarter continues. Before we go to some of our individual movers, I'm just looking at Expedia's second quarter revenue beating estimates across the board, $2.11 billion. Adjusted loss per share, 1.13. There was an estimated loss of 65 cents, so that loss coming in bigger than had been anticipated for this particular company. Unchanged in after hours. We'll see whether that just needs to play catch up a little bit. We're up more than a percentage point, but this, of course, is a signal, forward-looking guidance that this is a company that sees people wanting to get back out to holiday. 0 sells on this stock, Tim.
Wow. Hey, you know, I keep an eye on some of the stocks that made big moves today in the session. Some of those notable movers include Robinhood. I cannot go a day without talking about Robinhood, finishing the day down lower by more than 27%. It fell earlier in the day because proceeds from the stock sale, they are not going to the company. The owners who are selling close to 100 million shares own more than a third of the companies. We were talking about venture capital firms, Andreessen Horowitz, New Enterprise Associates, doing the stock sale, sending shares lower.
Yeah.
Also keep an eye on Cigna, down more than 10.9%. It fell as much as 14% earlier. It raised its medical care ratio forecast, essentially meaning that it expects to pay out more, Caroline, of its premium revenue and claims. Penn higher on the M&A news, and then also keep an eye on Viacom CBS, higher by more than 7% after earnings, Caroline.
Yeah, Bob Backish was joining a little bit earlier. Let's have a little look across the assets quickly, because it was a story of dollar weakness today for once, maybe coming on the back of that numbers. We saw jobless claims fall as had been anticipated a little bit yesterday. We're looking towards the non-farm payrolls today. Dollar falls as we don't need that sort of haven of choice at the moment. British pound rises. They're worried about inflation. We saw that coming from Andrew Bailey of the Bank of England talking to our own Guy Johnson. But also Canadian dollar up 0.3% against the US dollar. Why? Because we saw actually a bit of a rebound in oil. WTI crude up 1.5%. $69 is where we trade, as maybe some of those worries about the Delta variant just cool down a little bit, and we think a little bit more about some of the opportunities to see oil ramp higher. And I leave you with sovereign bonds, which were a completely mixed picture across the boards. Of course, we saw a bit of a sell-off in the United Kingdom on the back of the inflation data, inflation concerns, but elsewhere mixed when it comes to sovereign debt, Taylor.
Yeah, take a look at where we are within the U.S. I mean, we're climbing about 5 basis points or so. So this reflationary reopening trade really in vogue here. The numbers are red because it is bond price lower, yield higher. So you're getting a 72 on the 5-year. You're back up to a 122 on the 10-year and a 186 on the 30-year, up anywhere from 3 to 4 basis points on the curve. And Paul, this sort of brings us into right back to where we were in terms of earnings, right in this theme that lower yields have been a boost to equities. And yet you've had really, really strong earnings come in. We've noted, though, that 29% of the companies have been cutting some of their forward guidance. But what does this mean for a setup that this has been relatively strong?
Yeah, we have seen that with earnings, but one other theme that we've seen with earnings is this idea of uncertainty about the Delta variant, uncertainty about returning to work, and uncertainty when it comes to guidance. Indeed, we've seen a handful of companies have guidance that didn't meet expectations, and as a result, we've seen shares move lower, even though they had really good second calendar quarters.
Yeah, Tim, we're waiting on Novavax earnings. They are out, but the company actually saying that it's going to delay its U.S. submission for a COVID vaccine clearance. The shares had actually been higher by about 11% after hours, as some data has started to trickle out here about some of the testing that it was doing in India and over in Asia. But apparently that application for its COVID vaccine here in the U.S., the submission that it has to submit to the FDA for clearance, it is going to delay that. That is the redhead crossing the Bloomberg terminal right now. Novavax shares, which had been up as much as 11% in after hours trading, now pairing most of those gains.
And talking of COVID, talking of the Delta variant, Tim, you were mentioning it. I mean, TripAdvisor, another key benchmark barometer really of the desire for the consumer to get out there and start traveling again, coming in better than expected for its second quarter revenue, $235 million. The estimate was $190 million. The adjusted loss, this time smaller than had been anticipated. We're up almost 5%, but I think for everyone, Taylor, it's going to be about the forward-looking guidance. What do they say to where they expect the Delta variant to hit ongoing bookings, whether it be Expedia, whether it be TripAdvisor? Of course, we've got the booking CEO on a little bit later today.
What I can tell you is the forward guidance from Beyond Meat does not look pretty, as I see shares down now about 8% as their next quarter, that third quarter net revenue, very soft, 120 to 140 million. The Street, Paul, was looking for a number closer to 150. If we rewind and think about where we were in the second quarter, it looks okay with net revenue of 149 versus estimates of 140, an adjusted loss per share of 31 versus a loss of 23. So you're coming in with a loss that was worse than expected, but really it is that forward guidance and that third quarter that really trails by about 10 to, well, $30 million, Paul.
Yeah, so that's kind of what we saw. We were thinking about coming into this earnings season when we look at the Beyond Meat and the guidance. It's really about the guidance for a lot of these companies as we come out of the pandemic, maybe slower than we thought we would with the Delta variant. You really needed to get a good sense of where these businesses are going. So investors are, in fact, looking at the Q2 actual numbers, but they're really focusing on the forward guidance because, quite frankly, folks, a lot of analysts and a lot of investors are kind of flying dark here because of the pandemic and the uncertainties to a lot of these business models.
Yeah, just to reiterate, Beyond Meat sees third quarter revenue $120 million to $140 million, significantly shy of estimates of $153 million. Shares lower by more than 4.7% in after hours. Romain.
Yeah, and just a quick check back on Novavax. Those shares are now down about 11, 12% here in after-hours trading. They had been higher by about 12% after they came out with some data. This is about the booster shot, but then saying basically that they're going to delay submission for that full COVID vaccine clearance here in the U.S. That appears to be some concern. Remember, this is a company that had been really pushing back that deadline for, or that submission, I should say, for some time here, and investors had really started to get fed up with the company. Then they finally thought we had kind of reached the other side of this. Now it looks like Novavax still trying to work through whatever issues that it's trying to work through.
And when we go more macro at the moment, of course, we've just been talking about how the UK is worried about inflation. We're speaking with the Bank of England central bank policymaker over there, Andrew Bailey, a little bit earlier, and I was talking about Mary Daly looking at potentially tapering as soon as the end of this year, early next. We've now got interesting reporting coming from Dow Jones and talking of Joe Manchin worrying about the fact that he thinks the recession is over, Romain. Our strong economic recovery is well underway. Apparently, he sent this letter to the Fed Chair Jerome Powell, worried about perhaps just too loose a monetary policy in this material.
And this brings up an interesting thing, Romain. We've had a lot of talk in the last administration about the separation of politics from a Fed chair versus Congress, and Manchin highlighting inflation, which means that people on the ground, despite what the Fed models are telling Powell, are really feeling inflation.
Yeah, well, I mean, it's interesting, too. I mean, we're getting headlines actually crossing right now from Neil Kashkari, of course, over at Minneapolis Fed, basically talking about the transitory nature of this. It's a virtual discussion that he's holding, and he says that most of the high inflation that we're seeing is concentrated in just a few sectors. I mean, we were talking about this a little bit earlier off camera, Taylor and Caroline, about the inflation data coming out next week and how the last month that we saw, it was sort of concentrated in just a few areas. It was cars, it was restaurants, and a few travel areas, right?
Tell that to Grandma. Grandma says it's not transitory.
Well, let's focus tomorrow on the labor force participation rate and think about how much employers will have to raise wages in order to get those employees off the sidelines and back to work when we do get those numbers tomorrow morning. That's going to do it for our cross-platform coverage of Beyond the Bell here on Bloomberg Television, Bloomberg Radio, and on YouTube. Join us tomorrow for the same time, same place. We'll see you guys later.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, well, again, another day, another host of slew of earnings, I should say. We're getting some breaking news from Virgin Galactic. Remember, it was just about a month ago when Richard Branson went up to what he defines as space, not necessarily the international community defines as space. The company, Virgin Galactic, saying they are reopening sales. Prices are going to begin at $450,000 per seat.
And that's up from what I believe was $250,000. So
yeah, and
I guess proof of concept, cost you $200,000.
And inflation too, because the $250,000 seat was a few years ago. But I guess also what they see with demand, because since then we saw Jeff Bezos actually go to real space. And the company talk about how they've had so much demand for their auction pricing model that they could get $100 million in revenue for sending people to space.
Yeah, I mean, we're talking super yachts. We're talking sending people into space. So it's interesting to see what the demand ultimately is there for this type of experience. And that's kind of what we're talking about here is this experience, negative G's, and it comes at a price, though.
Yeah, shares of Virgin Galactic higher to the tune of 9% in after-hours trading. All right, let's get a check on the latest world and national news with Karen Chase here in New York. Hey, Karen.
Hey, Tim and Paul. President Biden said he was just keeping a campaign promise this afternoon as he signed an executive order on the White House lawn calling for half of all vehicles sold in the U.S. to be emission-free by 2030.
I'm following through on the campaign commitment to reverse the previous administration's short-sighted rollback of vehicle emissions and efficiency standards. I'm doing so with the support of the auto industry.
Tesla was noticeably absent from the guest list, even though Tesla sells more electric vehicles than any other. The companies that were invited to the ceremony, GM, Ford, and Stellantis, all use union labor. Good news for those who've gotten the Moderna COVID vaccine. Scientists now believe it protects you for months. Bloomberg's Amy Morris has the details.
Studies show the Moderna coronavirus vaccine is 93% effective 4 to 6 months after that second dose. That's just short of the shot's initial efficacy of 94%. Compare that to Pfizer, which says immunity can drop to 83% within 4 months of its second shot. Still, Moderna's latest data has not been published in a medical journal, and further details weren't released. Moderna's also exploring options for supplemental shots that could fend off emerging strains of the coronavirus. In Washington, I'm Amy Morris, Bloomberg Radio.
Amazon workers don't have to go back to the office until January now instead of September. The company pushed back the date in the face of the huge COVID surge. It's the latest big company to postpone the resumption of regular work habits. And former Baltimore Ravens quarterback Robert Griffin III is joining ESPN as an analyst. That, according to the Baltimore Sun. And now back to you, Tim and Paul.
All right, thank you so much, Karen Chase. We appreciate that. Let's get a look at those markets. Get a Bloomberg Business Flash with John Tucker. John.
All right, Paul, S&P 500, NASDAQ Composite, and the NASDAQ 100, all closing at record highs in today's session. Forward guidance from Beyond Meat after the bell, that's a disappointment. Beyond Meat sees its third quarter net revenue in a range of $120 to $140 million. That is below estimates. After-hours earnings from Novavax taking a back seat to the news. The company is delaying its submission for a COVID vaccine clearance. Right now, the shares are down 10%. Well, the U.S. jobs market remains a key window on the economic outlook. We're going to get non-farm payrolls report tomorrow at 8:30 Wall Street time. BlackRock, Wells Fargo pushing their return to office plans back about to early October, as Wall Street and the rest of the company grapples with rising COVID-19 rates across the country. Expedia out with its earnings. Second quarter revenue right now, $2.11 billion, and that is above analyst estimates. That was $1.98 billion. Once again, S&P 500 up 26 points for a record close at 4429. The NASDAQ Composite Index was up 114 points. The Dow ended the session up 271 points. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. All right, let's talk China, investing in China. It was such a great growth area. It is a great growth area, and there's lots of opportunities for Western investors to invest. Think Alibaba, think Didi, and Tencent and the like. Great exposure to one of the fastest growing parts of the world. But we've seen what I've always called China risk, which is the government can come in and really change the playing field. And that seems to be what's happening here. And it's really had a big impact on a lot of those high-flying stocks like Alibaba. Let's talk to an expert on this stuff. Kevin Carter, he's a founder of EMQQ, joins us on the phone from San Francisco. And EMQQ is an emerging markets, internet, and e-commerce ETF. Kevin, thanks so much for joining us here. Boy, that China risk that every investor in China had in the back of their mind, it's now front and center, isn't it?
Well, I couldn't have said it better myself. From the last 16 years since I've been focused on China, there's always this distrust and discomfort with the Chinese government. And the Chinese government, in the mind, I think, of investors is always just one day away from taking over Alibaba or taking over the internet or otherwise taking away people's money. The U.S. investors are going to lose their money because the Chinese government's going to take over some asset that it has some value, and U.S. investors are shareholders. And in the case specifically of the online education regulations and reform, that incident looked and felt the most like this boogeyman that investors have been waiting for. And indeed, part of their regulations are going to require that for the online education companies teaching the core curriculum to do it in a nonprofit fashion. So that looked and felt like people's worst fear because the shareholders lost a lot of money. But I don't think those issues are, the issues the online education space had mean that they're going to now take over or otherwise destroy value in Alibaba or JD or the other companies. It's just the country really had and continues to have a real problem with the very competitive and very intensive education and after school education programs. So I actually think the Chinese people like the move that was made, but obviously shareholders in the U.S. Were freaked out.
Yeah, and I think they continue to be freaked out. I'm looking at the EMQQ, your ETF here, and from those February highs, we're off more than 35% here. So some real value has been destroyed. So I guess my question is, from your perspective, what do you think the strategy is of the Chinese government and Chinese regulatory authorities? They seem to be just going right down the line, sector by sector by sector.
Well, I think that the Chinese government and the Chinese regulators are dealing with the exact same things that U.S. regulators and European regulators are, and that's struggling to make sure that the incredibly fast-growing e-commerce companies, the FANG stocks, if you will, in the U.S., that they're properly regulated and that they not have monopolistic powers, that data privacy is upheld. And so really the same things that are happening in China are happening here. Last month, the CEO of Apple was in a courtroom just over the hill from me defending some of Apple's activities, and Google's getting sued by 36 different state attorney generals for other antitrust issues. So this isn't a China issue. This is a government handling big technology issue. The problem, and I say that in air quotes, is that the Chinese system allows for them to do these things in a precise and fast fashion without the lobbying and the hearings and the things that will drag on in the courts. They can do it decisively, and unfortunately, that has recently had the effect of really scaring investors. And to me, that's an opportunity because this is the oldest adages on Wall Street are buy fear and sell greed, and the fear in these companies, from my 16 years of experience, reached an all-time high last Tuesday. So I understand investors are scared, but I think investors should be looking at the opportunity presented by this.
Yeah, that's a good question because there's a lot of folks suggesting or asking the question, is China even investable anymore? And what do you say to that?
That's what they say every time there's some issue with regulation in China. And it's happened multiple times, and it'll continue to happen, and people will run around with their hair on fire and say things like China's not investable, as multiple people said over the last couple of weeks. And these stocks are still trading, and they're still available for purchase, and I think they're trading now at very attractive valuations. You pay a high price for a cheery consensus, and right now we have the opposite of that. And as someone who's observed China for very closely for 16 years, I don't see the things that have gone on as negatives in the most every way with the Chinese government. The Ant Group IPO, which kind of started this regulatory parade, that I think the regulators were absolutely right that company needed to have some new regulations put around it, particularly in the lending part of the business. The antitrust and monopoly issues didn't bother me. They weren't a surprise either. A lot of the antitrust things that were going on in China were right out in the open. And you have to remember, we've had antitrust and monopoly laws here in the U.S. for 120 years. China's had them for 13. So for many years, Alibaba and Tencent didn't even have monopoly regulations under which to even consider. So I'm not worried by these things. I understand that people were very freaked out by the Didi fiasco, which shined a light on the fact that China needs a more coordinated sort of place for these companies to stop and get their passport stamped before they go public. And that scared people. But the education thing was a big deal. People lost money. And frankly, though, we didn't have any exposure to it. We had 0.05% exposure to that sector, but the stocks have been crushed, as you mentioned. So I think the reaction's much more negative than the fundamental impact of all these things.
All right, but going forward, all right, let's say if I'm an emerging market investor, I have to be in China. Okay, I get that. It's a huge part of the index. I have to be there. But I'll tell you what, they're going to pay a much higher risk premium, or I'm going to demand a much higher risk premium for my money. Do you think that is going to be a fundamental result of what's going on now?
as you said, the stocks are down, at least from their high of almost 40%, and the PEG ratio, the PE divided by the growth rate, is half the PEG of the U.S. FANG stocks. It's maybe a third the PEG ratio of the S&P 500. So that's baked in, and that gives me even more confidence to sort of pound the table at times like this, because there is that incredibly negative sentiment right now, but I think it's baked in, and I think it's overbaked. And by the way, importantly, everything's relative. So you say, okay, well, where else? Where are the emerging markets where I don't have government risk? Well, you can go to Brazil, where the last two presidents went to jail for basically looting the state-owned oil giant, which is in the Vanguard and iShares funds. And you could go to Russia. You could go to Korea, where one of their former presidents went to jail for financial crimes involving Samsung. So emerging markets are risky, and I think you need to keep that in mind. And the government and regulatory risks are part of the picture, but it's not just in China or emerging markets. The same, in great irony, last Tuesday was the day of the most intense pressure and the most intense fear about this situation. And at the same day, the New York Times had a cover story about how the Biden administration was assembling its team to attack our tech companies.
Right.
And they were making new highs.
Yep.
The Chinese tech companies are undergoing regulation.
I think that's a whole checks and balances thing. So, Kevin, just real quickly here, maybe 30 seconds. What are the sectors within China that you think are the most attractive?
Well, I think that the e-commerce sector in general, all over emerging markets, is the fastest growing part and really the fastest growing sector in the world. And it's all elements of consumption that are getting digitized. But the one area that's had the biggest growth and the most powerful growth is fintech. It's financial services. And yes, the Chinese companies have lost some value, but they're still going to grow and they're still going to be profitable. And I think that investors will make a lot of money over the long term in all parts of the e-commerce story in emerging markets. But the fintech story seems very clearly the most powerful one right now, but also one prone to be regulated in all countries.
All right, Kevin, thanks so much for that. We appreciate it. Pounding the table on China. Kevin Carter, founder EMQQ, joining us on the phone from San Francisco. Just want to get to a red headline crossing the Bloomberg terminal. The FDA developing COVID-19 vaccine booster plan. That's according to Dow Jones. So again, a lot of folks had been speculating that with the Delta variant that there would be a need for some type of booster. And the question is, which vaccine requires what type of booster and when and so on. So the story here is that the FDA is developing a vaccine booster plan, and that should provide some certainty for consumers and for pharmaceutical companies as well. That's according to the Dow Jones. We'll have more on that coming up. Again, still on COVID news, Novavax falls 10% on delayed submission for vaccine clearance. So lots of COVID news in the news, and we're bringing it all to you and continue to follow this very closely. Big earnings day today. We'll have more coming up. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we are going to talk about art curation, collecting art. And I'm not talking about traditional art that you might go see and buy at Christie's or Sotheby's. I'm talking about, art for the Instagram generation. And yes, there is an e-commerce retail solution to this. We will bring that to you. It's a really fascinating story. We have the CEO coming up in just a minute. But right now, let's go to John Tucker and get a Bloomberg Business Flash. John.
You say record, Paul. S&P 500, the NASDAQ 100, the NASDAQ Composite Index, all closing at record highs. And the parade of earnings after the bell continues. We've got AIG reporting adjusted earnings per share for the second quarter. That beat the average analyst estimate. News Corp reported adjusted earnings per share for the fourth quarter that beat the average analyst estimate. Virgin Galactic, nothing to write home about in terms of the earnings right there. But the shares are rising in the post-market trading. The company announcing it's going to reopen sales effective today. $450,000 will get you a seat to launch into wherever. Zillow posting better than expected results for the second quarter. Their websites and apps drawing a flood of prospective home buyers in the housing market. But the shares were lower. And then you can't ignore Groupon. Its shares in the post-market 18.5% higher. The second quarter adjusted earnings per share beating the average analyst estimates. Also Dropbox, that's one of the most active in the post-market trading, up almost 3%. Second quarter beat there. Well, investors have been focused on when the Federal Reserve is going to taper and eventually end stimulus efforts. Over at Mizuho Securities, economist Steve Rasciuto thinks the Fed should actually keep it going.
I don't think they should ever exit QE. I think they have to trim it back to the pace of nominal GDP growth and leave it an automatic pilot.
All right, the S&P 500 ended up 26 points at 4429. The NASDAQ Composite Index 114 points higher, a record there. The NASDAQ 100 closing up 98 points, a record there. And the Dow Jones Industrial Average, not too shabby there either, up 271 points at the close at 35,064. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. Online art sales, I didn't really know it was a thing, but it really is. Online art sales doubled in value from 2019 to reach a high of $12.4 billion, and 71% of Americans plan to redecorate in 2021, so that whole home art, home decor is a big market, and it is growing. And I want to bring on Alex Greenberg. Alex is Chief Executive Officer of Art Sugar. Joins us on the phone from Nantucket, which I understand is very nice. It's not the Jersey Shore, of course, but it's very nice, I understand. Alex, thanks so much for taking the time on a summer Thursday to join us. Love for you to just start and say, what is Art Sugar? What do you guys do?
Sure. Thanks so much for having me. It's great to chat. Art Sugar is the curated e-commerce platform for exclusive, eye-catching artwork and home decor objects. And with each purchase, we donate a portion of the proceeds to one of our pre-vetted charitable partners. I come from the fine art world where it's a little intimidating, so I wanted to do something different, and this site is basically saying, like, art's for everyone, and we want to meet all our customer needs affordably and accessibly.
Who's your target market here? Who's your typical buyer?
Female, maybe age 24 to 38. That's really our sweet spot, but we run the gamut, but I'd say our market is predominantly female.
And what are some of the, okay, so is this for the folks who maybe, they don't want to buy stuff that, they could get in a big box retailer, but maybe they're also not going to walk into a Sotheby's?
Right, exactly. It's sort of like bridges that from the big box sort of not unique approach, sort of like the live, laugh, love that may not be trendy or on the pulse. And it's at an affordable price point, way more affordable than something, on the fine art end where, our buyers aren't buying at that price point yet or don't want to, or maybe will graduate to that eventually. But this is really, if you want to decorate your home in a really cool way without breaking the bank.
What is the average price point for, a piece of art on that you would curate?
Right now, our average order value is $220. People generally buy a few things when they shop. I'd say the average, though, price, the piece maybe is $150 on the site now.
It's amazing. When I saw that data point about online art sales, $12.4 billion.
Crazy.
It's just extraordinary. It just stepping back, not necessarily for your business, but are people paying down big price points for fine art? Are they actually doing that online?
I believe they are. Our Sugar isn't catering to that market where people are spending, $15,000 on a piece of art. It's really for, a new art collector, a young art collector, or someone who just wants to elevate their home, affordably. I saw our sales during COVID grow 80%.
Wow.
So I think that just makes people being home more, willing to sort of, I don't think it's really a risk to buy online because these pieces are definitely pre-approved, pre-vetted, but they want to, uplift the space they're kind of stuck in, but also, it makes you think like, oh, I really should be, decorating my home. I haven't gotten to it yet, and now I'm finally can. So I think that there's a lot of things that work right here.
And Alex, do you and or your team, are you the ones that are picking out the pieces and curating them on your site?
So it's me. I'm the founder, and it's actually just been me on my team since I actually made my first offer day after getting some investors last month. But we work with celebrities and some influencers to curate collections on the site so that the collections are sort of pre-approved, and it makes for a really easy buying experience for our customers who, maybe it's their first artwork purchase ever, and they don't know where to start, and it sort of like helps the process move along.
All right, Alex, you're going to stick with us for just a moment. We're going to do some news, and we'll come back and we'll talk to you about that financing you just had, and we'll get a little bit more color on the growth of your company. Alex Greenberg, Chief Executive Officer of Art Sugar, joining us on the phone from Nantucket, talking about the online art world, and it's a much bigger market than I had anticipated. And again, as people, are staying home, spending more time at home, they're looking to redecorate, and home decor and art certainly a part of that. And if you don't necessarily have the means to walk into Sotheby's to acquire some fine art, then maybe places like Art Sugar give you an e-commerce and e-tail type of way to go. Right now, let's check on the latest world and national news with Karen Chase in the Bloomberg 1130 newsroom in New York.
Good afternoon. We just got some new numbers to crunch in the massive infrastructure bill. The Congressional Budget Office estimates that the $550 billion measure will add $256 billion to the federal budget deficit over a decade. The CBO's release of the number is a much-anticipated milestone as senators seek to push the legislation forward. Dr. Anthony Fauci is pleading with more Americans to get vaccinated, saying we could be in for a difficult fall and winter if the coronavirus is allowed to run rampant.
Viruses cannot mutate unless they replicate. And so the easiest way to prevent the scenario that you're proposing would be to get as many people vaccinated as quickly as we possibly can, to not allow the virus to continue to circulate in the community, giving it ample time to mutate.
President Biden today granted temporary refuge to people from Hong Kong amid the Chinese government's effort to crush the pro-democracy movement. The president signed a memo allowing people from Hong Kong currently residing in the U.S. to live and work in the country for 18 months, a move likely to further inflame U.S.-Beijing tensions. The president also signed an executive order calling for half of all vehicles sold in the U.S. to be emission-free by the year 2030. In attendance were American auto executives and UAW leaders, notably absent from the group, Tesla. Global news 24 hours a day, on air and on Bloomberg Quick Dig. powered by more than 2,700 journalists and analysts from more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Okay, following second quarter results that showed a wider loss than the prior period, Uber CEO Dara Khosrowshahi said it's hard to anticipate the effects from the Delta variant on growth. He's confident, however, in the company's mobility and delivery platforms to offset each other. He spoke to Bloomberg's Emily Chang. Let's take a listen.
As far as the Delta goes, it's difficult to tell what the effect is, except for markets that have closed down. So Sydney, for example, has really shut down. The mobility business comes down, but our delivery business grows very significantly. And we net out, for example, in Sydney at 30% ahead of 19 volume. So overall, we have this great hedge between mobility and delivery. But when we look at city by city, you look at a New York, you look at a Paris, you look at an LA, et cetera, it's very hard to discern any patterns as far as Delta goes. We'll be watching very closely.
And obviously, no profitability, really important milestone. You've promised you're still going to hit that before the end of the year. But what are the chances that Delta could shake that up too? What are the chances you don't hit that milestone?
You know, the good news for us is that we have the hedge, right? So if mobility gets hit because of Delta, we see the delivery business growing. And we've also stated that the delivery business is going to get EBITDA profitable by Q4 as well. So we think we're reasonably protected. Obviously, it's a very, very uncertain environment, but we're the only company out there that's leading in mobility on a global basis outside of China, that's leading in delivery on a global basis outside of China. These businesses are now strengthening each other. And actually, customers who use both mobility and delivery account for nearly 50% of our gross bookings on a global basis. So if you stay home, you're going to use Eats. If you want to get out to a restaurant, you're going to use classic Uber. That is a strength and the unique strength that we bring.
That's Uber CEO Dara Khosrowshahi sitting down with Emily Chang talking about Uber and their recent earnings. Again, they have the ride business. They have the Eats business. The stock closed up 3% today. It's down 15% year to date.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash on a day when some of the major averages have record closes. S&P 500, the NASDAQ Composite, and the NASDAQ 100. And earnings after the close, Expedia reporting a bigger loss than anticipated, suggested a bumpy future ahead. This is all a sign that rising COVID-19 cases have dampened confidence in the travel industry. Then there's AIG, the CEO there delivering on his plans for growth after spending years overhauling the big insurer. They beat earnings estimates for the 5th consecutive quarter. Zillow posting better than expected results for the second quarter. The company's websites, their apps, drew a flood of prospective home buyers in the hot housing market here in the U.S. And then there's Apple, not earnings, but they had this announcement they're going to launch new software this year. It's going to look through users' iCloud Photos accounts, searching for sexually explicit images of kids, and then report it to the proper authorities. S&P 500 was up 26 points. The NASDAQ Composite Index up 114 points. The NASDAQ 100 ending up 98 points. All records. The Dow closed up 271 points. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. Let's get back to Alex Greenberg. Alex is a Chief Executive Officer for Art Sugar, joining us on the phone from the lovely island of Nantucket. So, Alex, your e-commerce platform for home decor, everyday art, I guess you would call it, needs capital. You just had a seed round. Tell us about that.
Yes. So, as I mentioned, my business grew 80%. From March 2020, and it was just me, and all of a sudden, I mean, not overnight, but almost overnight, the business grew a ton, and I had always thought I would, go for capital, but I didn't know when I would be ready, and finally I knew I was ready. Right. So I spoke to a fefew VCs. I met the one that ended up investing through Instagram, which was a really on-brand way for both of us because 66% of my revenue comes from my Instagram account. Artsugar.co is the handle. And this person who's an influencer was liking my photos, and I noticed her because she has like 90,000 followers. And then I saw she was an investor, and she loves art and color. And we direct messaged through Instagram, and I ended up pitching to her, and she was like in. And we spoke for like 9 months on the phone and over Zoom, and we closed our deal the beginning of July.
And so what are you going to use? What are you going to use this capital for?
I'm going to use the capital for hiring someone. I actually just put my first offer out today. I'm really excited about that, and she accepted it. She accepted my offer today. And marketing, a bit of a rebrand for the business, and more focus on customer service platform and customer service touch points, just like a better communication. It's really important to me that the customers are happy, so I'm investing in that too, and more collaborations with other businesses and artists, and then also focus on our in-house designs and products.
Interesting. So this online kind of e-commerce driven home decor art business, it's a niche that I think you've identified where folks maybe don't want to go to a big box retailer to find home decor, but then and artwork to hang on the walls. But talk to us about how you said your business grew 80%. I'm sure a lot of that was driven by the fact that a lot of folks were saying, boy, I'm going to spending a lot more time in my home, whether it's an apartment or a house.
Right, exactly.
And I better spruce this place up. Talk to us about how the pandemic impacted your business.
Yeah, the pandemic obviously, unfortunately, forced everyone inside their homes, and I think that sometimes decorating is put on the back burner because people are really busy in their lives, and it's not necessarily, a focus or priority. And all of a sudden, it became one because you're kind of sitting in that space, and you want to elevate your walls, but also maybe with uplifting product and design, which is what Art Sugar sells. We have a very uplifting, happy aesthetic. And it sort of was the right time to kind of shop on Art Sugar. And also during the pandemic, I think it was last March, actually, I just launched home decor. Before I hadn't done that, it was only wall art. So the decor also, gave us a bit of an edge during pandemic.
Good time and place to be launching a business like yours, I think. Alex Greenberg, thank you so much for joining us, Chief Executive Officer for Art Sugar, joining us on the phone from Nantucket. It's always nice to talk to new entrepreneurs launching businesses, particularly during these uncertain times. Well, coming up, Bloomberg Sound On from the 99.1 studios in Washington, D.C. with our host, Joe Matthew. Joe joins us now. Joe, good to chat with you. What do we got coming up for Bloomberg Sound On?
Well, we're getting charged up about EVs today. This was the big event. You, I'm sure, saw a bit of it and listened to it. With Joe Biden there on the South Lawn, a sunny day, and electric vehicles parked on the lawn. He even got in one and drove it around, which is something that makes the Secret Service really nervous.
I'm sure.
Most presidents go 4 to 8 years without driving, but, sometimes he can't resist. He's a car guy, he says. Now, we've got a new goal that would be half of all new auto sales in this country by 2030 being EVs. It's interesting, though, because these companies, GM, Ford especially, to a lesser extent Chrysler and its parent Stellantis, they were already leaning into EVs. So we're going to talk a little bit coming up this hour about what difference this might make. And we'll be joined later by Congressman Dan Kildee, a Democrat from Michigan, who was with the president on the lawn today. And, of course, they were feeling real good about the big three. Bet you heard who wasn't there, though.
Who?
Elon Musk. He was not invited. It has become clear that that's because it is not a union shop at Tesla. And this was a UAW event. This was Big
Three.
That
makes sense now. I get it. Okay.
Absolutely. So he's tweeting, hey, what about me?
Yeah, I tell you what's really changed, Joe, at least to my perception, is just like a light switch has been thrown in Detroit and even in Germany with Volkswagen, where a lot of these big automakers just in the last 6 to 9 months have said we're all in, and big announcements, $35 billion here, $25 billion there over the next number of years.
You really put your finger on it, too, with Volkswagen. They're making more EVs than the Americans are yet. Also not invited today, but still, you're right. It's a different world we're in. But what does that mean about chips, about nickel, about copper, all of that we need to build these cars, and we're about to make a lot more of them.
Yeah, and it's interesting. It seemed I was really skeptical, but now it seems like when you see the likes of GM and Ford and the others kind of saying this is where it's going, and it's not just Tesla and their little band of devotees. This is going mainstream. Like when you see a Ford F-150 going down the street with an EV, then you're serious.
And that's the world we'll be living in. Hopefully they can get them done. People who were, putting money down on Broncos haven't received one yet because the wait list is so long. But yeah, it doesn't take a real visionary to look ahead 10 years and see that this is going to be a very different world we're driving in.
All right, Joe. All right, that sounds great. We'll be looking forward to that. Joe Matthew, Bloomberg Sound On, coming up in just moments on 99.1 Studio in Washington, D.C. And just recapping the markets here, another strong day for equity markets. The S&P up about 0.6%, 26 points. The Dow Jones Industrials, John Farrow's favorite, up almost 0.8%, 35,064. That's a number, that's a level that gets your attention. NASDAQ also had a good day, so pretty much across the board, up almost 0.8%, 114 points. We're on that 15,000 watch for Tom Keene. For NASDAQ, it closed at 14,895. But the real action today, we don't talk about it maybe as much as we should, is small cap stocks. Russell small caps up 1.8% for the small cappers, 2236. So some strong earnings coming through this quarter. And what's more, besides the strong earnings for the second quarter, is guidance. I think a lot of investors, despite the uncertainty of the Delta variant, they're liking some of the guidance they're getting from some of these management teams. I'm Paul Sweeney with Tim Stenovic. You've been listening to Bloomberg Business Week. This is Bloomberg.